Hey everybody, it's Greg Harrelson here with Century 21, the Harrelson Group, with my co-host, as usual, Abe Safa, also with Century 21, the Harrelson Group. And we are busy selling a lot of real estate in Myrtle Beach in the Grand Strand, as well as keeping our eyes and ears on the market. And we just want to share with you what's going on in the local market right now. Abe, thank you again for always being here. And I'm excited to have another conversation with you.
Yeah, Greg. So am I. Always looking forward to these.
Yeah. So I think we're going to kick off, and now that January's over, we're going to kind of do a little bit of recap for January, and then I think what we also want to do, give people a little bit of updates on what's going on. I got something on my mind that builders are doing that I can share. That interest rate's been bam, 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 bouncing around. I like what it's doing sometimes and some days. I don't like what it's doing in other days, but we'll also talk about that. So you want to just start with the January recap?
Yeah, let's talk about, since the last Tuesday when we did a call, the final numbers in our MLS didn't come out for January. So now that they're out,
Yes.
I'd like to kind of dive into those kind of briefly. And I want to make sure we're clear that this is the past, right? So this is what happened in January. We're going to talk about what happened, and then we're going to talk about what things are like today on the ground day to day. So starting with single family homes, the one thing I look at is, and this is probably what you're hearing in the news when you hear big headlines about, home sales down big time. If you look at January, the number of sold homes, single family homes, resales only, not new construction, 321 homes sold in our area. So that's down 33% compared to last year. So it's a scary number. But if you guys have been listening every single week, this is something that we've been talking about. Expect these numbers. We told you to expect them November, December, January. Probably expect these February, March, maybe April before things start to level out. So number of closed sales for the month of January, single family homes down 33%. And Greg, at any time you want to hop in, just let me know. Otherwise, I'm just going to keep going through these numbers.
No,
And then
I think it would be best, Abe, if you just go ahead and go through it. I'll chime in if I feel like I need to, but or if I have an idea. But I'm kind of going to wait for you to get through it, and then I think we'll go back and dissect a little bit.
Okay, perfect. Let me go ahead and share this chart. Let me remove this banner. Okay, and you'll see what I'm talking about here. So this is January numbers, and you see this is what you see in the news has been called the housing recession. This is when it's starting in the summertime. Right. And you see how it's just been down month after month, going down with the number of closed sales in single family homes. Now, if we look at condos, it's going to be very similar. You see, it's just a straight down shot, the number of closed sales. So this is something we expected. Number of condos sold in the month of January, 308, down 46% compared to last year. Okay.
Can you quickly, I just don't know if you can, just see what it was for December?
Yeah, December was 347. I don't know how much it was down. I can't remember, but it was somewhere in that ballpark. I want to say 30 to 40% range. So 347 closed in December.
Could you show me November?
Yeah, there's November 403.
Yeah, interesting. And then
there's
go back
October.
Yeah.
441.
So 1, 2, 3, 4, 5 months in a row, just less and less and less. And the reason that is, I'm saying, or I wanted to look at that, is because we can analyze year over year numbers where we analyze this January compared to last January. And I'm saying this for the audience, not to tell you, hey, because you know this very well. So I like to look at two things. I like to say, okay, this January versus last January, yes, it's significantly down, like 46%. That's a huge downturn, right? But then I want to look at, well, what was last month and the month before? And if you look at okay, what they were last month, which you said it was what, 343?
347.
347. And this month's it's 308. Okay. So now that tells me that the discrepancy between in the last 60 days is not nearly as much as the discrepancy in the last over 12 months ago. And I'm also looking at that to see if I can see some early signs of trends that the market could be getting a little bit better. And we know, I think, that in the last 3 weeks, we've started to see more sales. So probably mid-January, we started to see more activity, more contracts written. So I have a feeling those additional contracts is probably going to show up in April as closed sales. And so that March and April are the ones, especially April, is very important to me to see whether or not we've reversed a 12-month trend or not.
Yeah, there's no question about it. So what you're talking about is like the most leading of leading indicators, like what we're
Yes.
seeing on the front lines right now. So we
Yes.
know how many showings we have on our properties, on our listings. We know how many offers we're getting. But those are not going to reflect in these numbers. Of course, they're going to show up in April's closed sales, is what you'll see. But no, things are definitely much better. As a matter of fact, I put a home on the market 10 days ago or 2 weeks ago in Plantation Lakes. We've had 21 showings already.
Oh,
And so I mean, and that's a $685,000 home.
yeah,
Right? So there's definitely more activity in the market right now than there was all through the wintertime. There's no question about it that more buyers are in the market.
that's fantastic. Well, good. Okay.
So let's look at the sales price, right? Because a lot of people are wondering whether prices are down or not, right? And look at this up and down seesaw with condos, right? So this was the summertime, July, and then dips a little bit in August, up a little bit in September, down, up, down, up. So for the month of January, the median sales price on condos across the board was $228,000. The peak was $240,000. So overall, as a market, when it comes to condos, prices are down a little bit, but nothing like a lot of people were expecting. A big crash, a big drop in price. So a lot of condos right now, I'm actually getting higher prices. I know I've seen some of your pendings than we had in the summertime, and then there's some that are getting a little bit less. So depending on what you own, it's gonna differ based on the property. But the prices are still holding very strong. So. And again, a lot of you out there thinking, because we talk to a lot of condo owners out there, they think, oh, we missed the market. You really may not have missed it, right? It's still out there. It's still a pretty good market. So now year over year, if you look at 228 for the month of January compared to last year, January, up 17%.
Yeah.
Single family home, I'll show you what that looks like. Kind of hanging in there, 350,000, not high as high as condos compared to last year, only up 4.5%. 350. The peak, which was May of 2022, was 380. So down roughly 9%, somewhere in that ballpark.
Yeah. It's interesting, for property owners that might be listening to this, you might be thinking, well, gosh, buyers, I mean, what are buyers saying? Are they even interested in buying? Are they worried about the market going down? We also have to remember this. A lot of times the buyers of property, especially homes down in the Grand Strand, they're selling a property in another market. And so their market are showing very similar trends. So, they may buy for a little bit less here, but they're selling for a little bit less there. It's kind of like almost like a mute point. It's like they get a little, they sell low and they buy low. Or if the market's going up here, why do people still buy? Because they're buying high, but they're selling high. It's kind of interesting. It's almost like they're just repositioning their equity down into Myrtle Beach. So a lot of times these fluctuations don't matter as much if somebody's buying to live in one of these properties. Again, the reason why I say it doesn't matter is if they pay $10,000 more, they're probably getting $10,000 or $12,000 more in New Jersey. Or if they sell it for $20,000 less in New Jersey, they're probably buying it for $15,000, $20,000 less in Myrtle Beach. So they're given less money and they're getting less money, or vice versa. So when we start to see little fluctuations like this, and I know maybe as an owner, you might be thinking, well, $15,000, that's a big fluctuation. Well, that's a normal fluctuation in a normal market. If we actually were experiencing a down market, we'd be seeing fluctuations much greater than $15,000, $20,000. We'd be seeing $60,000 and $70,000 fluctuations. And that's a little bit more painful for a lot of people. And those more extreme numbers is what kind of puts the market at a halt, or at least slows it down. Right now, we're kind of, in my short-term analysis, we're actually gaining steam again.
There's no question about it. That's a great point, Greg. And I'll add one more thing. Keep in mind, we're in a housing recession, right, since the summertime. So we went through 6 of the slowest real estate months in a very, very long time. So to have that few buyers out there, number of closed sales being down 30, 40% every single month the last 4 or 5 months, and only lose that much in home value, I think is a great thing.
Yeah. Yes. Yeah, this is a victory,
Yeah,
a
no
victory.
question, no
Yeah,
question about it. And then inventory is still staying as low as it is. Home sellers are in great position right now.
yeah.
Great position.
The
Two more.
Go ahead,
Sorry, again.
please.
Yeah. I was going to say two quick numbers I want to look at real quick because I know we get a lot of questions on these. Is days on the market, single family homes. Look at what's happened to days on the market. It was all the way down to a median of 52. Now it's up to 79. Compared to last year, it was 18% increase on single family homes for days on the market. So homes are taking longer. You're not getting those quick sales in 1 or 2 days anymore. Not right now, but they're still selling. And then when you look at condos, very similar. Days on the market is 75, up 34% from last year. And the last thing I want to look at is percentage of list price, because that's an important number to look at. So right now for condos, 96.9%, down 3% compared to last year. You see, when we peaked, we just sat at 100 for a very long time. This is when the condo market got really hot and condos was just popping, and it's kind of been declining, month after month. And right now it's right at 96.9. Single family homes, it's 97.7.
Yeah. Yeah, got it. So, a couple things back to the days on the market, Abe.
Mhm.
So, it is such an important number for us to continue to look at, because if we see that number get to say 120, 120 would be 4 months. If we see the days on market getting to 120, again, I don't have a crystal ball, but my experience tells me that's when we'll see owners starting to price their property a little bit more aggressively,
Mhm.
or agents and owners will agree to reduce their prices. So it's when we get to that average days on the market being around 4 months, 120 days, is when that's at the time where we'll really have to pay attention to pricing.
No question. Yeah.
Because there could be price reductions at that point. Now, I am not going to speculate that we're going to get there, because if anything, in another 30 or 60 days, we may see a slight little decrease in days on the market. That's possible. But if it was to continue to go up to 4 months, I think that's when we're going to be seeing that maybe prices start to come down as days on the market get up to that 120 days on the market, the 4-month average days on the market. That's something we'll have to continue to look at. The other thing that I wanted to mention is, again, I am completely giving you an opinion, as Abe and I try to make sure that we're always clear when we're giving an opinion versus when we're stating fact. All these charts are facts. This is going to be an opinion. Abe, I get so many sellers that are thinking, well, gosh, you know what? If I actually wait, will this market run up again and we'll experience another spike in prices, like, another 20% increase in prices? I'm an optimist, but I'm also a realist. I want it to happen like that for my sellers. But the reason why we don't believe I don't believe that it's going to happen like that, is because there's just no buyers. If the prices went up by another 20%, 15%, and interest rates are maintained where they are right now, which is around 6.2, 6.3 today, somewhere in that range, the real affordability, the affordability becomes the issue. It's not desire, it's not willingness or desire and wanting to buy. It's the affordability issue. So there is a point where, I think we could go up a little bit, but I would just speculate to say it's likely that we're kind of towards the top, but we may see a little bit higher high or a little bit lower low, but we're probably going to be normalized here. If anything, it could go down a little bit, but I don't see it spiking aggressively up. If it does spike aggressively up, my opinion is the Feds are going to raise those interest rates even higher, the Fed rate, and then that'll affect mortgage rates to kind of cool it off. So just for those of you that are sitting on the sidelines thinking that there's a whole bunch of money to be made in the next 6 months, I don't know that the numbers are showing that.
Yeah. Well, one important thing to note on the days on the market, Greg, if you live outside this market and you see, like, the national average right now is 28 days, 27, 28 days. So ours is 75 to 79 days. So it's high, but it's always been high.
Yes.
Like, if I go, so for us, 79 is actually a good number. If I show you what it was in the past, I mean, look, it's always been, it's hovered in the 150s, 160s. It's always been up in this area, always been above 120. And I do agree with you, Greg, that if it got to 120, I think we could see that's a big softening in this market. Going, this is opinion again. I don't see us going there. I really
Yeah.
don't.
Yeah. I think we could be going down. I think in 2 months, we're probably going to show a lower number. But, I think we're going to show less days on the market in the next 2 months. I'm hoping for that. I can tell you right now that I'm aggressively marketing properties as you are. So we're doing our part on marketing them aggressively so we can keep the sell down for our sellers. But the reason why we both would say that that could be a problem is because if it gets to 4 months, then some sellers will get impatient and they'll just lower the price because they want to move on with their plans. And then that will reset the appraisal values. Right. So that's kind of how that works. But neither one of us really anticipate that's going to happen.
Yeah, so much of this hinges on the mortgage rates.
Yes.
Like the mortgage rates just have a huge impact on what our real estate market is doing right now.
Yeah.
So talking about mortgage rates, it actually dipped below 6% last week, which I was really excited about. Thursday, it went down to 5.99. And then the jobs report came out, a really strong jobs report came out, and then all of a sudden, boom, it jumped up. So as of yesterday, the 30-year national average was 6.39% for a 30-year mortgage.
Yeah.
So that's a lot of
fluctuation. It's going to continue being, in my opinion, it's kind of hard to like go up and go down and then get it, and then just level off at the perfect level. Usually it's like this. It's extreme, 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 extreme. And then over time, it just kind of levels out. So we're just going through extremes, and we just have to keep our head down and understand that if you're thinking about selling, there's a lot of buyers, and inventories, is still extremely low. In my opinion, it's a seller's market / normal market right now. And I think we'll start to see that in the numbers in the next couple of months.
Yeah, if you look at our day-to-day changes in the mortgage rates, it's changing a lot. But if you look over the last 6 months, I mean, it's been going down. It's been going down and down and down. So we're heading in the right direction. I mean, I've got a feeling by the time we get into summertime, maybe May, it could be as early as May. I think we might be in the low fives. I'm even willing to gamble that we might break 5 by summertime, Greg. I think it'd be below 5.
All right. If you guys all heard it here, I'll bet you a Starbucks. I want iced tea.
Okay. What's the bet that
it'll break 5 whenever you want to say it.
Okay. August 1st. Between now and August 1st, it'll break 5.
Okay.
Okay.
Or you owe me a venti black iced tea with 1 Splenda.
You got it.
All right.
But look, I mean, going back to like what's happening right now, day to day activity is good. It's picking up. Things feel different. Definitely more action, more excitement in the air. The buyers are calling, whether it's on condos, whether it's homes. We're starting to feel like, okay, the market is bouncing back. Things are going back to some sort of normalcy. So I like that a lot.
Me too. All right, Abe. Well, hey, everybody. Thank you so much for tuning in. And we appreciate comments and emails that you send us and whatnot. So please subscribe to the channel so you can get alerts when we do this. We do this once a week. I'm not going to spam you or anything. We just want to make sure that you're able to keep your, stay in the know of what's going on with your real estate assets along the Grand Strand. If you would like to reach out to us, you can call us or text us. There's our number right there. And we'd love to earn your business. And even if you don't want to do business right now, you just have a question, give us a call. We'd love to answer your question. Abe, thank you again.
Enjoyed it, Greg. Thank you all for watching.
Bye, everybody.